Gilles Moec, co-chief European economist at Deutsche Bank. So, Gilles, we have here the ECB saying that essentially the threat to growth is growing ever stronger here in the eurozone. What are the implications of this for monetary policy?
Well, usually the monthly bulletin simply repeats what has been said just before in the ECB's press conference, and basically what the ECB did last time was to lay the ground for a rate cut in their always so gradual way of changing their communication. Basically, they said two things. They said our balance of risk for inflation went down from on the upside to neutral, and our balance of risk for growth has moved from neutral to negative. That is normally consistent with a rate cut. Of course, there's never anything mechanical in the way a central bank operates, and that's even more the case with the ECB, which hates any kind of rule or any kind of pre-commitment. But I think there's an acknowledgement now at the ECB that what we're faced with is not just the usual post-recovery volatility. It is worse than that. It has to do with black clouds coming from the US and to some extent from the emerging areas, and it's also having to do with our own issues, because we are now to the point where the peripheral crisis, the sovereign bond crisis, is probably having an impact on the real economy.
All right, so then tell me, when do you think we might see a cut in interest rates? Will it happen before Mario Draghi takes over?
Our baseline is that they would prefer to wait until December. If you remember the behavior of the ECB in 2008, at a time when the crisis was actually worse than today, it took them quite a while. They did not cut rates before November of 2008, after having increased the rate in July. So baseline still December. November would be tricky because it would be the first decision presided by Draghi, which is not the best thing for any new governor to being sworn in. And the risks that they may have to move as early as October is clearly rising. Still not our baseline, but if we see continuation of bad data, they will probably be forced into this.
I'm just wondering, what are the implications for Draghi's position if he does find himself having to take the initiative on a rate hike, particularly after we've had the resignation of two Germans from the ECB?
It's not ideal, that's pretty clear. Normally, no one should care about the national origin of the leaders of the central bank, but in reality, we all know that people will draw conclusions from what is being done. I would, however, say that this risk of, damaging the credibility of the ECB is probably quite small in the current juncture, because I think that there's now a growing recognition everywhere in the eurozone, and not just in the periphery, but that there is time, there is scope for action from the central bank. If he has to cut rates on his first month in office, I think that there will be at the time a general consensus that it's basically the only thing that can be done, the only thing that is realistic, and his being Italian won't, I think, be an impediment in this case. But it's clear that the burden of proof is different as a newcomer, as a president. But again, the situation is getting so clear now that it makes things easier.
And Gilles, just a quick one, a very brief response from you. Markets somewhat reassured by a statement from Angela Merkel, Nicolas Sarkozy, really reiterating their conviction that Greece will remain within the eurozone. The fact that they're even saying something like that, does that show how the threat of Greece possibly leaving the structure has really started to gain some traction?
Yeah, at the same time, I mean, it's better to state things in the open. I mean, it's been in the market for a while. We've had those questions from clients for maybe 2 years, so that the European leaders actually face the reality that this is the kind of issues that they're faced with. I think it's positive, and they came out with a fairly forceful comment. So it's better not to try to stray away from reality. It's becoming a question that is increasingly asked. The need to confront this.
All right, thanks very much. Gilles Moec, co-chief European economist at Deutsche Bank.